Hello traders and welcome to another video review. Today is Wednesday 19th of May 2021. Let's take a look at the Forex calendar. The key data overnight were wage cost index and Westpac Consumer Index data from Australia. Both of them has beat the expectations. The industrial production from Japan was an expected 1.7% versus 2.2, which is another disappointment from the Japanese economy. News from the United Kingdom consumer price index is in line with the expectations, 0.6%, but it's higher than the last month, 0.3%. The core price index is higher as well, 1.3% versus 1.1%. Retail price index, PPI input, PPI output are both better than expected or in line with the expectations. So there is some sort of the inflationary pressure on the British pound. At 9 o'clock there is a ECB financial stability report scheduled for release, and there is one more part of the data from UK. 9:30 there's house price index to be released. Some other data scheduled for release from the Eurozone are consumer price index, scheduled at 10 o'clock. The market expects 1.6%, just as a month before. During the New York session, we got a bunch of data from Canada consumer price index, and all of this data related to the consumer price index. Please notice that the consumer price index is supposed to be lower than last month, 0.2% versus 0.5%. So it's definitely worth to keep an eye on. And of course, 3:30, the crude oil inventories for all of you crude oil traders, and we got the some speech from the FOMC member Rafael Bostic, 4:15 and 7 o'clock FOMC meeting minutes as the most important event of the day. So let's take a look at the crude oil, US dollar to the Canadian dollar, and because there's plenty of data from UK, let's take a look at the British pound. We start from cable, British pound to American dollar, daily time frame chart. Well, it's being it behaves exactly as anticipated. We broke above the recent high from the 11th of the May. We recently made a high at 1.4219. We are heading towards, of course, this level here, 1.4241, which is marked as a thick red line, because it's a swing high and it's a technical resistance. As you can see, blue arrow is here, and the direction is still valid. If this level 1.4241 is violated, then the next one is, as you can see, the zone between 1.4344, 1.4377, which is 33 pips supply zone on the British pound. So far, RSI is strong, RSI is positive, so the bulls are in full control of the market and they are getting higher towards those mentioned levels. So there is nothing really different than yesterday. The key technical support is 1.4017 only. A violation of this level and market reversal towards 1.3922 will give us some sort of bearish expectations towards the end of the month. But so far, bullish outlook. US dollar to the Canadian dollar, because of the last incoming data release regarding the inflationary pressure on the Canadian dollar. So what do we have here? The market keeps going up. It didn't bounce even 2.29% here. So all of these bounces are lower than 2.28. This one is lower, this one is lower, and what we are making, we keep making lower lows. So right now we made a lower low at 1.2011. So big round number of 1.20 is coming for the bears. This will be right now our technical resistance, 1.2244. And let me just mark the level of 1.20 because it's Yeah, it will be key level, a round level for markets. So let's just put it on the chart. There you go. This is 1.20. As you can see, we got some sort of the pin bar here, 11 pips above the 1.20, but so far, as you can see, the short term, even the channel that we might draw here, even this channel is still, let's see, something like this is still valid, because as you can see, the price is respecting it and is moving inside of this short-term channel. So it looks like we might even hit 1.20 in the near future. But let's take a look on this chart from a wider perspective, because as you can see, we just broke below this lows of 2017, which is very bad. We are getting towards 1.2, and the next eventual support for the US dollar to the Canadian dollar, multi-year support, is somewhere around the level of let me just take a look, the lows 1.1920. So it's 80 pips below 1.2, and as you can see, there is nothing here. There is nothing here unless the level of 1.12, basically 1.1276 is hit. So key levels here, key levels of support on the US dollar to Canadian dollar. Please keep an eye on this, because if there is no bounce, if there is no bullish reaction on these levels, despite the fact that overall market conditions are extremely oversold, I mean the bulls might have a problem, because this is the major support, multi-year support. Please keep an eye on this for appropriate market reaction. If there isn't any, we are going lower on the US dollar to the Canadian dollar. And the last one for today is crude oil. Futures. So again, as we can see on the daily time frame chart, again the level of 66.55 had been broken, and then the market closed below this level. First time, second time, third time, the market rejected higher prices above 66.54. So the bears are defending this level and are pushing the market lower. We are still, however, trading inside of this short-term channel. This one we are out of. We are out of this channel right now. We are in this, of course, short-term channel, and as long as we trade here inside of it, and there is no candle close below it, it's like around 62.34. If there is no close below 62.34, it still means that this move up is being developed. However, because of the overlapping wave structure, this is still considered to be some sort of the wave B, some sort of the complex wave B to the upside. It doesn't look that much impulsive anymore, so please take this into the consideration, that finally bulls might just throw a towel, and then we will have some kind of a sell-off. Of course, the key long-term technical support is 57.09, which is the low of 23rd of the March this year. So far we are going higher, we are going up. We try to break 66.54, but so far no avail. The swing high 67.97 is still not challenged, and the momentum is hesitating between 50 points and 60 points. So that's not that much, in my opinion, and please be careful for this momentum to break to the downside. Eventually, of course, we first see breakout out of this channel, which will be another bearish signal. So that's my outlook for the crude oil. Let's just take a look at Bitcoin. There you go. Mostly because it keeps going down, and our targets for the wave C had been hit. Okay, so right now all of these levels are now the technical resistance levels, of course. Now they are getting invalidated because we have a new lower lows, and the recent low was made here, which is 40% correction, ABC correction. So where can we go? Where can we stop this correction? So far it looks very nice. We should stop this corrective decline pretty much soon. But if there is no reaction from the level of 38,000, let's say this is $58,600, then the price will most likely go to the previous wave 4 lows, which is around the level of $30,000. So this is the key level. We might still bounce, but it doesn't actually look like the bulls are strong enough to bounce. Market conditions extremely oversold, but no divergence yet. So please keep an eye on the 38,600. If it's violated, then we are going lower towards 30,000. This is $8,000 lower, and that correction then will be around 50% correction. Yeah, 53.46%. So please keep an eye on Bitcoin as well. Look for some sort of bullish indications, like a bullish candlestick reversal of price patterns. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.